let's start off with the gross premiums, because we saw a growth of around 7%. Give us an indication of what has been driving this growth, given the fact that we know that GT Assurance is a composite insurer underwriting life and non-life businesses as well. Hi there, Michael. Michael?
Okay, I can hear you now.
Can you hear me now? Let me repeat that. Thank you so much for your time. Let's start off with the growth in gross premiums. What is driving this growth? We saw growth of around 7%.
The business is basically driven mostly by what we had seen in our energy business. Energy business grew 8%. The corporate business itself grew 5%, and then the rest was driven by our retail business. Agency business grew about 127%, and our bank assurance actually grew 57%. Now, most of that, at least within the retail business space, was driven by motor insurance, which actually grew 14% to the half year. So we actually see a robust growth despite the sort of seemingly economic slowdown we seem to have within the country.
Well, let's look at the non-life underwriting business. We know that GT Assurance runs a business model that emphasizes direct sales as opposed to using insurance brokers to drive its growth. What segment of the insurance business have you been seeing the most success in, and what has been the contribution of this to the recent earnings, of course, first half earnings?
Well, just as I said earlier, our energy business grew 8%. We've started leading on a number of accounts for the company. We've seen new transactions come in. Within the corporate space, whilst we've actually dropped some accounts just basically because we haven't had the cash coming into the business, we've taken on new accounts generally going forward. Corporate business, as I said, grew 5%, energy grew 8%, new accounts being taken on. But we're still optimistic that these accounts will continue to grow as we go through the rest of the year.
Taking a look at the overall Nigerian banking environment, we know that there's new regulations that have come to the fore. They're relatively stringent, but many banks are starting to adhere to these rules. How is that going to be impacting your bottom line going forward?
As I said, we've seen the growth going forward. Whilst there has definitely been a slowdown, we continue to run our business model profitably going forward. It's been a challenge within the investment space. It's been a challenge in that some clients haven't been paid. The NICOM regulations have now come in that if we don't collect cash after 90 days, we have to make full provision for it. So we generally just go after cash transactions to ensure that we don't have write-offs. We don't have write-offs in the business.
Well, just let's zoom into those write-offs. So what have you seen for the first half period?
For the first half period, not as bad as they were last year because the new regulations came in. Over the period, I think we wrote off just about 200 million, but those were provisions, and that was just generally because we just had to take those provisions. After the half year, we've seen about that, most of that 200 million come back in, so you'd actually see robust figures going forward.
Right. In terms of what we've been seeing on the interbank lending markets, we know that money supply is increasingly starting to go up quite extensively. What are you expecting on that front, and how do you think this is going to sort of impact the confidence between the lending of the banks to each other?
Within the interbank space, I mean, I'll leave that within the banking sector. It does impact us within the investment world in that interest rates have the interest rates have actually collapsed totally. It has affected our investment income. We, on the other hand, actually being more proactive rather than look at what everybody is looking at. We are trying as much as possible to ensure that we actually exceed expectations of what we did last year.
In terms of the assurance and insurance space, we know that the market had been relatively saturated and we're starting to see a little bit of consolidation. What are your forecasts for the industry in Nigeria going forward?
The forecast is we do believe that there are too many players within the industry, but market factors will determine basically what happens. We can't forecast what it is. We actually have our own strategies going forward. We'll actually keep on working at those strategies going forward and ensure that we continue to be one of the top players within the industry as we've positioned ourselves to be.
Michael, are you looking for any acquisitions at this point in time?
I will leave that to the board. It's not within my purview to actually say that. The board actually gives us the strategy going forward.
Michael, looking at, as you mentioned, oil and gas sector, we have seen quite a nice tick up there for you, and that's also been affecting your bottom line positively. In terms of how much are you seeing in terms of partnering with foreign underwriters to ensure risks in the capital-intensive industry?
We run our own strategy. As you saw, the figures have actually grown in at least the oil and gas sector by 8%. We continue to lead on various accounts. We continue to get new accounts come in. It's an industry that continues to grow. The bill that is likely to be signed shortly, we believe would actually favor us going forward. We have a very strong balance sheet. We're a very strong company. We have management in place that can actually take up all the challenges. So we're actually well prepared and we're well ready for it going forward.
Michael, I mentioned the central bank's new reforms, and we know that GT Assurance is majority owned by Guaranty Trust Bank. Can you give us an indication of what new strategies are going to be implemented down the line?
I would love to know what's in the mind of Guaranty Trust Bank. They own, we're a subsidiary of the bank. They will possibly decide what they want to do going forward. We've seen part of the guidelines of the central bank as to what's going to happen, but as to what GT Bank is actually going to do with us, I'll basically leave that up to them. I don't know at this particular point.
So, Michael, are you saying is there a little bit of uncertainty when it comes to the strategy going forward?
I wouldn't say there's a bit of uncertainty. The bank would possibly decide what they have. It's not yet been communicated, but at the appropriate time, the bank would actually let everybody know.
In terms of the, the overall Nigerian picture and, of course, the demand for insurance and assurance, give us an indication of what your thoughts are, and when do you expect to see a conducive rebound to that of the boom years?
It's a very large industry with 150 million people out there. The retail space is very, very large enough. We actually continue to play in the retail space. Our bank assurance model is performing absolutely well. Out of over 100 branches of Guaranty Trust Bank we perform. We're actually working with some other banks as well. It's very, very large. Within the motor business, so there's actually grown 14% this year. We actually see continuous growth going forward. People who never insured their cars before actually coming on stream. People who insure their cars third party before actually taking on stream in coming up comprehensive, and so which is why somewhere along the line some of our claims ratio has risen. So it is actually a very, very big industry going forward, and we are well positioned to take part of it.